Hi everyone, welcome back to our YouTube channel where we break down complex laws into simple. Today we are diving into banking law, the rules that keep our financial system safe, fair, and running smoothly. Whether you are a student prepping for exams, a business owner navigating loans, or just curious about why your bank charges these sneaky fees, this video has you covered. We'll unpack key regulations like the Banking Regulation Act, real world cases that saved it all. Stick around till the end for a bonus cheat sheet download. If you are new here, hit that subscribe button and let's get started. Origin of the word bank. According to some authorities, the word bank is derived from the word bankers or bank, which means a bench. Some other authorities opine that the word bank is derived from the German word bank, which means a joint stock fund. Early history of banking. The Babylonians had developed a banking system as early as 2000 BC. The Romans' minute regulations as to the conduct of private banking were calculated to create the utmost confidence in it. In the middle of 12th century, banks were established at Venice and Genoa. The modern banking may be traced to the modern dealers in Florence. In England, during the reign of Edward III, money changing was taken up by Royal Exchanger for the benefit of the crown. Later on, merchants decided to keep their cash with goldsmiths. In 1672, English banking received a rude setback. The Bank of England was established in 1694. With the enactment of Tonnage Act, small private banking firms were extremely affected by the new bank. Another important act gave a monopoly of note issue to the Bank of England. This was the first of the central banks and is still the banker for the English government. The Bank of England was originally privately owned but was nationalized in 1946 and eventually became an independent organization in 1998. The Bank of England issues all banknotes for England and Wales, and it is responsible for regulating banknotes issued by Scottish and Northern Irish banks. As the forerunner to the modern banking system of the UK, the BOE manages monetary policy and has its headquarters in the city of London. The Bank of England keeps safe all the gold reserves of the UK and that of some other countries. It is the largest protector of gold reserves in the world. In India, banking is an ancient business in India, with some of oldest reference in the writings of Manu. Bankers played an important role during the Mughal period, during the early part of the East India Company era. Agency houses were involved in banking. Three presidency banks were established in Bengal, Bombay, and Madras in the early 19th century. These banks functioned independently for about a century before they were merged into newly formed Imperial Bank of India in 1921. The Imperial Bank was the forerunner of the present State Bank of India. The latter was established under the State Bank of India Act of 1955 and took over the Imperial Bank. The Swadeshi movement witnessed the birth of several indigenous banks, including the Punjab National Bank, Bank of Baroda, and Canara Bank in 1935. The Reserve Bank of India was established under the Reserve Bank of India Act as the Central Bank of India. In spite of all these developments, independent India inherited a rather weak banking and financial system marked by a multitude of small and unstable private banks, whose failures frequently robbed their middle class depositors of their life's savings. After independence, the Reserve Bank of India was nationalized in 1949 and given wide powers in the area of bank supervision through the Banking Companies Act, later renamed Banking Regulations Act. The nationalization of the Imperial Bank through the formation of the State Bank of India and the subsequent acquisition of the state owned banks in 8 princely states by the State Bank of India in 1959 made the government the dominant player in the banking industry. In 1969, 14 major Indian commercial banks were nationalized. These banks are Allahabad Bank, Bank of Baroda, Bank of India, Canara Bank, Central Bank of India, Dena Bank, Indian Bank, Indian Overseas Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank of India, United Commercial Bank, and Bijaya Bank. And in 1980, 6 more banks were nationalized. These banks constitute the public sector banks, while the other scheduled banks and non scheduled banks are in the private sector. There you have it, banking law demystified. If this helped, smash that like button, drop a comment with your biggest banking question, and subscribe for more law breakdowns every week. Thanks for watching. See you in the next one.